This is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset, and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million. And what happens is the space goes from 2.5 trillion, where it is today, to, let's say, at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like. And then on to 100 trillion, which is the size of most of the other asset classes like equities.
Raoul Pal, a prominent macro analyst renowned for his astute insights into macroeconomic trends, recently offered his perspective on the potential growth path of the cryptocurrency market. Pal's analysis, dubbed the Everything Code, delves into how the global liquidity cycle since 2008 has shaped macroeconomic trends, propelling growth assets such as tech stocks and cryptocurrencies to unprecedented heights. The core premise is that the depreciation of fiat currencies, driven by increased liquidity to meet debt obligations, acts as a catalyst for the rise in asset prices. Pal suggests that this phenomenon, combined with the rapid adoption of cryptocurrencies mirroring the exponential growth of the internet, could lead to a significant increase in cryptocurrency market capitalization. Pal predicts a meteoric rise from the current $2.5 trillion to $10 trillion, bolstered by Metcalfe's law and driven by unparalleled adoption rates. Furthermore, he envisions even more substantial growth, projecting the market to potentially reach $100 trillion in the future. Pal enthusiastically agrees that there is a growing consensus within certain financial sectors regarding the transformative potential of cryptocurrencies. According to Pal, investing in a top coin like Solana could turn a $10,000 investment into a substantial six-figure sum during this bullish cycle. For those interested in staying informed about the latest crypto developments and news, subscribing to their channel and liking their videos is encouraged.
Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moreheads, the Wences Caceres, all of these guys, the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16. And that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently.
Raoul Pal, a prominent macro analyst renowned for his astute insights into macroeconomic trends, recently offered his perspective on the potential growth path of the cryptocurrency market. Pal's analysis, dubbed the Everything Code, delves into how the global liquidity. This is the most rapid adoption of an asset class or technology the world has ever witnessed. The speed of adoption is even surpassing that of AI, which can now be deployed instantly by companies like Microsoft anywhere in the world. The significance lies in the fact that unlike AI, which is a technology, this asset class has become a massive store of value. By the end of 2025, it is projected to reach 1 billion users and expand to 4 billion users by 2030. Bitcoin, currently valued around $2.5 trillion, is expected to surge to $10 trillion by the end of its current growth cycle. Simultaneously, the S&P 500 is achieving record highs, creating an intriguing dilemma for investors. The proposition that Bitcoin may offer superior long-term returns compared to the S&P 500 is contentious, but supported by compelling evidence. Kathy Wood of ARK Invest recently compared Bitcoin's performance against 6 major asset classes over several years, revealing Bitcoin's remarkable outperformance. Over the past 7 years alone, Bitcoin's annualized returns averaged a staggering 44%, significantly outstripping traditional assets like gold, commodities, real estate, bonds, stocks, and emerging markets. From 2011 to 2021, Bitcoin emerged as the top-performing asset globally, boasting an annualized return of 230%, dwarfing the S&P 500's 14% annualized return. The potential growth from $2.5 trillion to $10 trillion, or even $100 trillion, represents an unprecedented wealth accumulation event on a global scale, comparable to the financialization boom of the baby boomer generation. To put this in perspective, it took the S&P 500 a century to amass a $50 trillion valuation, a milestone cryptocurrency assets are set to achieve in less than 2 decades. Robert Kiyosaki, author of Rich Dad, Poor Dad, has expressed bullish sentiments on cryptocurrencies, particularly Bitcoin, Ethereum, and Solana. Kiyosaki predicts Bitcoin could reach $350,000, citing his concerns over U.S. leadership and his confidence in the asset's potential. In conclusion, established assets like Bitcoin, Ethereum, and Solana continue to dominate due to their proven track records and ongoing popularity. Bitcoin has seen an annualized growth rate of approximately 150% since 2012, while Ethereum and Solana have similarly impressive rates, reinforcing their appeal as long-term investments alongside traditional assets like gold and silver.
It's so easy to get caught up in the drama, the volatility, the down cycles, then the glory times. You forget what's actually happening. And, kind of in the end, every single, major crypto position you've ever sold, you regret when you look back. Because if you divide any asset by crypto, any single asset on earth, they all go down in price versus owning Bitcoin, or you choose your asset, right? And it's like, once you realize that, it's really difficult to get that out of your head. And so it, to me, became a realization over time from about 2020 onwards that there was no point doing anything else. Even though I'm a true macro guy and I used to do absolutely everything else, I now observe what the dollar's doing and stuff like that, but only within the context of where it's going with crypto.
Solana has been trading sideways for 3 weeks amid broader market consolidation. The fact that Solana's price is developing an upward continuation trend along with the resumption of on-chain activity hints at the potential for an extended rally. The long-term trend of the Solana coin has turned bullish, as it has almost recovered the entire loss caused by the FTX collapse. Solana price is now experiencing a steady rise under the influence of an ascending trend line. In May, the Solana blockchain saw the creation of 455,000 tokens, driven by lowering barriers to end the aspiration to develop successful meme coins. Throughout the year, Solana saw the launch of approximately 1 million new tokens, highlighting a strong trend in token generalization on the platform. Solana coin shows great potential for future growth and is well positioned to excel the expected bull run, with the market cap of cryptocurrencies expected to reach $5 trillion. Most major cryptocurrencies are likely to reach new highs. Solana, in particular, shows promising prospects and aims to get closer to the 10K mark.